Hello everybody, Tim Knight here, and it is time for our weekend review. One of you mentioned last weekend, hey, is there like an index overview and so forth? And there wasn't, but I often start the earlier videos with something very general. Just to be clear, this video is free to everybody. There is a second video on both Saturday and Sunday that will be visible to all paying members. And there'll be a third video on both Saturday and Sunday that is visible to gold and platinum members. And the first video will have 10 stocks. The second videos will have another 10 stocks. And the third video will have 15. Do the math and it comes up to 70, which is the grand total of stocks in my bear pen. So just that little preface there. But anyway, as far as general indexes, we're just going to look at the S&P 500 cash index here. This goes all the way back to the start of the 20th century. And just before you zoom in, just to recap here is this, what I consider kind of the golden age of markets, when you had honest-to-God markets, where you had booms and busts and booms and busts and cycles, and very, very nice, real capitalism way, way back then. Then the Federal Reserve got created and things got weird. And you got this big bubble, otherwise known as the Roaring Twenties, which resulted in this huge crash. And then we began this honest-to-God bull market of American prosperity, growing earnings, growing productivity. Then you got this inflation and central bank craziness. And then most recently, you had the internet bubble, the housing bubble, and the everything bubble. As you can see, the internet bubble and the housing bubble took maybe 3 years to create and a couple of years to deflate. The everything bubble is 13 years and going strong. The interminable everything bubble, it seems. Here's the channel. And even at this great distance, you can see that something's changed. Something's changed because we actually tagged the tippity top of this channel rather recently, just last month on January 4. And we began legging down. Now, this is not the cleanest pattern in the universe. In fact, it's hardly even a pattern. In fact, it's not a pattern at all. I have blithely put this line here simply to anchor Wednesday's high to some kind of dividing line. This pattern means next to nothing. This is not a pattern. It's just price lines with a horizontal line that I've slapped down with Wednesday's peak as a delineator, nothing more. I wish it was a really clean pattern. Some indexes have pretty clean patterns right now, but this is not one of them. And this is a big one, S&P 500. But we did have from Jan 4 to Jan 24 a nice hearty tumble. And we have since done a yeoman's job trying to retrace that. I'm just slapping down a fib here. Yeah, okay, so it looks like we retraced a Fibonacci 61.8% of it, almost on the button. And then it told me, actually this is pretty cool. So I'm just thinking out loud here. I did not do this before, but this is pretty spiffy actually. So I've drawn a retracement from the lifetime peak down to January's bottom. And it just so happens that the retrace stopped almost to the pixel at 61.8% and fell. And on Friday, the low was right at the 38.2% Fibonacci. Maybe it's chance, but that's pretty damned amazing, to tell you the truth, that it just happened to peak here and happened to bottom here. So that's kind of spiffy. So screw this line. We'll just leave that there instead. This is a little more helpful, I think. But that's kind of where we're at. I mean, long term, clearly we are still at nosebleed levels. And the short term, really indeterminate. We're kind of in a no man's land right now. But having said that, I do have 70 items in my bear pen. And these are all bearish ideas. Of these 70, I am in 28 different bearish positions. So most of these I'm not in, some of them I am. So let's get going through them for the first 10. In alphabetical order. Agilent, symbol A, right triangle pattern. Accenture, ACN. Zoom in here. We had a trend line failure. And this kind of calls for a couple of horizontals because there's a couple of price gaps here that are worthy. We'll do this one in a little bit of a different style of red. So here's a price gap here and a price gap between Wednesday and Thursday. Autodesk. It's one of my favorites, to tell you the truth. We're light years away from hardcore support there, and we've got a very good looking reversal pattern there. It isn't any specific pattern in a classic sense, but I really like the behavior and the shape of this pattern as in terms of a reversal. AIZ, Assurant. My view is that this pattern here is very similar to what we saw back pre-financial crisis. Like so. ALB, Albemarle. This one is, on the one hand, it's got some nice reversals during its history. A little bit of an asterisk next to this one because this is a little bit messy right here. It got below this line but recovered and got back into the pattern. So a little, kind of a give it a grade B, even a B minus pattern. ALGN, Align Technology. I think these are the guys that make the teeth straightening stuff, as if that mattered to this discussion. But as you can see, it's had no shortage of rounded tops, and this most recent one is a pretty big one. And this is a pretty clean pattern. I give this, if we're handing out grades, give this like an A minus. We fell hard and retraced, and on Wednesday turned away from that topping pattern. Ally Financial, a huge topping pattern, but not quite finished. It really was going to require a break of 43.89 to be considered done. And we're a good $5 away from that, a good 10% away. But, you know, you could get in and just hope. But it's a big one if it completes. Advanced Micro Devices, AMD. This one was on an incredible tear for years and years and years. It peaked back on November 30, fell really hard, about 40% of its value lost in a very short amount of time. Hit a bottom here, then went flying higher, and so it's a little messy. But the most bearish thing about it is that it's quite plainly broken its long-term uptrend line there. Affiliated Managers Group, AMG. Once again, historically, plenty of examples of big rounded tops. The most recent one is here, and quite clean. Not every single pixel perfect, but pretty clean there. Last one, a little company you may have heard of called Amazon. A lot of action on Thursday and Friday with this one. The history of the company is basically an explosive move after the IPO, a big top, a plunge, and then at the bottom of that plunge began a 20+ year ascending channel, which we are still very much within. And as I said in my premium post on Friday morning, you know, if there was anybody itching to short Amazon, Friday was a pretty darn good time to do so, because all the uncertainty was out of the way now that earnings were gone. Plus, at its peak, it got to a very attractive price here with respect to all this overhead supply. Pretty appealing risk-reward ratio. Okay, I like to keep these under 10 minutes, and I see we're getting close to that 10-minute mark, so I will thank you for your interest in Slope, and super duper extra thank you to paying members, which have more videos coming after this one.